This content is for educational, informational, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how we look at the market, how BTA analyze the market. This is Rod from BTA, and we are known as the middle traders. All right, let's take a look at the major market index ETFs. The major market index ETFs at the end of the day, June the 30th, Thursday, June the 30th, 2022. This is the last trading day of the month. And actually, this is the last trading day for the quarter. Yeah, this is the last trading day for the quarter, as a matter of fact. So here we got the daily chart of the DIA, the ETF that tracks the Dow Jones. Paul, can you see it? Paul, can you see this here?
I see it.
Okay, good. So we got the DIA here, ETF that tracks the Dow Jones. And let's zoom in a little bit. Okay, let's zoom in a little bit. Make it a little bigger. Bring it over. Okay, look. Today's action was a wild day of trading. It was a seesaw. Okay, it was a roller coaster rather. So look, it opened up. It traded up. Well, first it traded down, and then it rallied back up, and it traded all the way up to the 5 and the 9-day moving average. This white line is the 5-day moving average. This green line is the 9-day moving average. Notice how it's sideways, flat to turning down. And then you got this overhead downward trending 21-day moving average, this yellow line. But today, prices traded up and stopped almost to the penny. How many times we got to say that? Almost to the penny at the 5 and the 9-day moving average. And the 5-day moving average has crossed below the 9. And you had above average volume. No, I'm sorry, not above. You didn't have above average volume, but you had higher volume than the previous day. So today counts as distribution because you had a lower, today was a lower day. It closed lower than yesterday, so it was a down day. And the volume was higher than the previous day. So it's a distribution day. But what's very interesting about this is that we found resistance almost to the penny. The high of today, it ran up to the 5 and the 9, and it got rejected, and it closed below the 5 and the 9 today. So look, when you closing below a 5-day moving average, there's nothing to think about. We back closing below a downward trending, a downward sloping 5-day moving average. There's nothing to talk about. I mean, when you start seeing that, there's nothing to talk about. All right. So now let's look at the structural chart right here. Look, this was good. Now this was, at least this was good. All right. We got below support, but then it recovered. Okay. It recovered and closed back above the support level. So this is the level we was talking about yesterday. All right. This horizontal support level right here at 306.28. And then you had 305.26 right below it. Well, look what happened today. We opened up right above 306.28. We traded down, but it recovered and it rallied up and it closed a little bit higher. We closed up $2.67, but no, I'm sorry. I apologize. It closed down. It closed down $2.67. I apologize. Today was a down day. It closed down $2.67, right? But it closed up just a little bit higher than the open is what I was trying to say. But the main thing is that it closed above this support level at 306.28 and above 305.26. We closed at 307.82. So we closed just a little bit above the 306.28 support level. So we got back above this horizontal support area right here and right here. So we're above that. That's good. If we'd have closed below that, that wouldn't have been that great for the DIA because now we're closing below the 5 and the 9-day moving average and we broke support. So that wouldn't have been good, but it held. It held support on the structural chart. But at the end of the day, it is it is below the downward trending 5-day moving average, and the downward sloping 5-day moving average, and the downward sloping 9-day moving average. Yeah, Paul, it's being recorded. I'm recording on a different system right now, so it's being recorded.
Okay.
So, yeah. So let's take a look at the on balance volume real quick. Let's take a look at the on balance volume. All right. You see that on balance volume line is still pointing down. These lines, for some reason, it gets a little distorted for some reason, but we can redraw it here. Let's expand it a little bit and zoom in. Okay. So up here, the green line is the line of closing prices, right? This is the line of closing prices. This is the previous high right here. We got above it, but the prices is trying to come back and it's testing it. It hasn't broke below it. It's holding that support right now. But look at the on balance volume line. It's pointing down. Granted, the accumulation distribution line tried to turn up a little bit, but the on balance volume line is our main line analysis for volume, right? We want the accumulation distribution line and the price volume trend to confirm what we're seeing on the on balance volume. But for right now, the on balance volume line is pointing straight down. You see that, but the accumulation distribution line trying to turn up, but the price volume trend is also turning down. The volume is the volume is to the downside. Okay, the volume is to the downside. So the volume is coming out. All right, the volume is coming out. You saw today was a distribution day on our volume analysis with the volume with the volume bars. Look at the guppy for the DIA. Look at the guppy for the DIA. You see we back below the faster green moving averages. We back below the faster shorter term green moving averages. Okay, look at the magenta line of closing prices. So right there, the magenta line of closing prices has now gotten back below the faster shorter term green moving averages. And look at the green moving averages now starting to twist. Okay, it's starting to twist. You see the twisting and pointing down. All right, so that's not good. All right, so the guppy is telling us that the momentum is clearly to the downside because the magenta line of closing prices has gotten back below the faster, shorter term green moving averages. So the guppy is telling you the trend, the momentum and the trend is to the downside. That's for sure. Okay, there's no ifs, ands, or buts about it. That's for sure. All right, now let's go back to our workspace here. Let's look at the momentum. All right. Look at this. Look at the momentum here. Looking for the momentum for the DIA. Okay. Look at the RSI, the relative strength index. Well, you can see the relative strength index right now is below 50, and it's pointing down. It's trying to get down to the 40 level. Okay. This red dotted line right here. This red dotted line right here is the 40 level. Well, we below 50. The yellow line is 50. So it's on the wrong side of the 50-yard line, okay? The momentum is on the wrong side of the 50-yard line. The sellers are in control. And now it's coming down and just testing the 40 level. Not good. The Chaikin money flow has turned red, and the histogram is expanding to the downside. So money is coming out. The Chaikin money flow is telling you the money is coming out, all right? And you got on the stochastic here, you got a bearish crossover, all right? It's recycling to the downside on the stochastic. Let's take a look at it. Look right here. You see the stochastic line right here, the yellow line crossed below the crayon line, and that's a bearish crossover. I hope I said bearish, not bullish. Bearish crossover on the stochastic. And the stochastic line is below the crayon line. But what's even more important is that at the 50 level, it got rejected at the 50 level and it's turning down. It's at 41.56. You see the KST, which is a slower, the no short thing, baby. It's the no short thing. It's trading down, and they already had a bearish crossover. That checks several different rate of changes all combined together. All right, so it's looking at pure momentum, the rate of change. All right, so the DIA is clearly have a negative outlook right now. It could change. Anything can happen tomorrow. But for right now, we trading below a downward trend, a downward sloping 5-day moving average. There's nothing to talk about. Let's look at the SPY. Let's look at the SPY. Look at this. Okay, let's expand this so we can see it. Let's look at our key moving averages. Once again, it got rejected at the 5 and the 9-day moving average. It got rejected. Look, it ran straight up to the 5 and the 9-day moving average, almost to the penny. I'm telling y'all, these moving averages are for real, okay? You ain't got to believe me. Keep watching, all right? Keep watching. Here's the downward trending 21-day moving average. Here's the 5-day in the white, the 9-day in the green. Look what happened. Almost to the penny. We traded up to the 5 and the 9-day moving average, almost to the penny, and it got rejected. We closed below the 5-day moving average for 3 days in a row now, okay? So we trading below and closing below a 5-day moving average. That's not good. There's nothing to talk about. There is no possibility of me going long a stock that's below, closing below and trading below a 5-day moving average. I'm not saying you got to be short like me right now. I'm short. Well, technically I shouldn't be short, right? Because we had a fall today, but we're going to talk about that. But right now, we breaking through levels and we closing below a downward trending 5-day moving average. Like I said, this is not financial advice. But wouldn't it be wonderful if it was? But it's not. But if it was, cha-ching, ching. And you definitely would not lose a lot of money because we are not going to be going long something that's trading below a downward sloping, downward trending 5-day moving average. Look at the distribution. Lower prices with higher volume than the previous day and above average volume distribution all day long, okay? So somebody was selling this thing. It tried to recover. But it got rejected at the 5 and the 9. All right, let's look at the structural chart, right? We talked about these levels yesterday, okay? We talked about these levels yesterday, all right? Look on the structural chart of the SPY. This is a daily chart of the SPY we're looking at, right? The ETF that tracks the Standard & Poor's 500, the SPY. That's what we're looking at. Well, look at the structural chart on the SPY, okay? The daily chart of the SPY. Look, let's expand this. We got right to the 380 level. Look, right to the 380 level, okay? Right to the 380 level. We talked about 380.54 being key support yesterday. We gapped down, opened below it, traded up right to it, dang near to the penny. Do you see that? Do you see what I'm saying? Almost to the penny. How many times y'all gonna hear me say to the penny? And we got rejected and we traded down, okay? Now the only thing about this, we got this downward trending internal trend line right here. We did close slightly above it. I would have liked to have seen it break below, got rejected, and break below this trend line here going into tomorrow. But I would not be surprised if this thing don't trade back down to 371. I would not be surprised if this thing don't trade down to 371. This is the next area of interest that I'm looking at. Right now, it's getting rejected at 380. Look, it could reverse. Possibly it could. But right now, it got rejected at a key level that we spoke about. I want to bring the weekly chart over for 1 second, all right? Because we're going to look at the weekly charts. But this is the level that we spoke about yesterday, okay? This weekly chart, we spoke about this yesterday, all right? The 380 level. Remember, this is a weekly chart, so we got one more day, trading day for the week. You see that 380 level right here? We talked about it. The 380 level, 380.54. Here's this week's trading action. We closed below it today, 377.25. I told y'all if it break below 380, I might take a nibble because this is a key level, right? This is a key level on the weekly, long-term weekly support level. If we break that, I told you I would not be surprised if it don't come down to 371 from 380. And it did trade down to it, and it rallied back up. Okay, so it made it to the 371, and it rallied back up. All right, but I'm just saying to you that this if we look at the daily chart, let's go back to the daily chart, right? You almost got to the 371 level. Look, right here. This is back on the daily chart now of the SPY. You see today's action? It almost got there. It traded almost down to this 371 level, and then it rallied back up and closed above this downward trend line. Look, it still got rejected at 380.54. If this thing reverses and get back below this downward trend line, I would not be surprised if it don't trade down to 371. At the end of the day, if we break back above 380, then that might be a different story, okay? Because 380 was the pivot, okay? That was the support level that we were looking at. Now, let's take a look at the on-balance volume, all right? You see the volume coming out of this thing? You see the volume coming out of this thing? Okay? You see that volume, that on-balance volume line pointing straight down? Huh? Oh, yeah. Paul, you see that? Oh, yeah. You see that volume pointing straight down? As price is breaking back below its high, here's the closing line, the green line of closing prices. It's broke back below its support level right here. The price is back below that. All right. Now, as price was breaking below that level, and that's the 379, 380 level right here. Look at the volume coming out straight down. Okay. So the volume is coming out. You see the distribution on the volume bar. Look, I'm not saying that this thing can't reverse. I'm just telling you right now, it's dangerous to be long. I'm not saying be short like me. No. Okay. I'm not saying that. Our teacher taught us not to really go short. He only went long, really. And the situation like this, he'd say, put your behind on the sidelines. Okay. You ain't got the short, but get out. All right. Get the cash before you get get yourself hurt. Get your head handed to you. All right. Well, look. Check this out. Look at the RSI here. We got rejection at the 50. It traded down, and we almost at the 40 level. This red dotted line, the 40 level. It's on the wrong side of the 50-yard line, and now it's about to get below 40. Not good. That's extremely bearish. That's showing that the bears, the sellers, could be getting firmly in control if this thing get below 40. Right now it's at 41.32. Look at the check-in money flow. Negative and expanding to the downside. Money is coming out. All right. So you see the volume coming out. You see the momentum is being controlled by the sellers. And let's look at the stochastic. It recycled down yesterday. We had a bearish crossover yesterday, and it's pushing a little lower today. Okay. You see that stochastic line right there? The yellow line crossed below. The yellow line crossed below the crayon. It's below 50. It's at 37.81. Okay, so the stochastic is telling you that prices are closing lower and lower within this range over the last 14 days. It's a problem. Look at the guppy. The magenta line of closing prices is back below the faster, shorter term green moving averages. Look at the guppy. You see the guppy? Look at the guppy. The magenta line of closing prices just got back below the faster, shorter term green moving averages. Is below that, and the green moving average is twisting, starting to turn back down. Like this twist up here. See that twist where it's squeezing and twist and start turning down? Boy, that's when you can have problems. This thing is starting to twist right here. If it start twisting and flip over, this thing could come back down to these lows down here. You never know. But it's definitely not something you want to be long. That's what I'm saying. This is not financial advice. We know that. But if it was, you would not lose a lot of money. But it's not. Okay? So let's go to the Qs real quick. Let's go to the Qs. Here's the Qs, right? Here's the Qs. Real quick, let's look at the Qs. Let's look at the key moving averages for the Qs. All right? Here we go. This is the weekly. I want to go back to the daily. Okay, let's go back to the daily. And let's go to the key moving averages for the Qs. Look at that. Look at that. Look at that. Closed below, traded almost right to the high. The high of today's action is almost smack dab to the penny of the 5 and the 9-day moving average. Look, come on, y'all. Let's be for real. How many times you got to see this? How many times you got to hear me say almost to the penny before you start saying, yo, these levels and moving averages mean something. Okay, the 5 and the 9. The 5-day moving average is white. The 5-day moving average is the white. The 9-day moving average is the green. We traded almost to it to the penny, and it got rejected. Look at the volume higher than the previous day. A down day with higher volume than the previous day. Distribution. We closed below the 5-day moving average for 3 days in a row. When you're below a 5-day moving average, it's nothing to talk about. Okay? It's nothing to talk about. Okay? Let's look at the structural chart. I told y'all if it get below 280, okay, I might take a nibble. All right? And we got below 280, and I took a nibble. But it came back and it closed almost even. Okay? It came back and it closed almost even. So let's look at it real fast. Let's zoom in. I would have liked to have seen it close below 280, but it didn't. But it's still right on 280. Look at that. Right here. This was the horizontal support level at 280.21. We opened up, traded below it, rallied up, came back, and closed right on it, okay, at 280.28, okay. Right now in the aftermarket, it traded down to 279.84. So just a few pennies below 280.21. So that was the support level. It broke it, traded all the way down, but rallied all the way back up. I'm saying if it stayed below this level and it can't get above it and find resistance, I wouldn't be surprised if we come down and trust this trend line, trust this internal trend line, and start maybe getting down to 269.71. But at the end of the day, it got to get resistance at the 280.21 level. And right now, it closed at it, and it's a possibility that it may get rejected and stay there. Look at the RSI. Okay, below 50 is below 50, and it's pointing down toward the 40 level. It's on the wrong side of the 50-yard line. Here's the 50. The yellow is the 50. The RSI line got right to 50 and got rejected, and now it's testing this red dotted 40 level. The momentum is in control by the seller. The sellers are in control. The momentum is clearly to the downside. Look at the check-in money flow. It turned negative and it's expanding to the downside. Money is clearly coming out. They all look the same. The DIA, the SPY, the Qs is telling you that this thing is in trouble. Okay? I'm saying, like I said, I'm not telling you to be short, but for sure, as far as I'm concerned, you're playing a very dangerous game if you're trying to be long, okay? Because you're trading below a downward trend of 5-day and 9-day moving average. Look at the stochastic. Right here. Bearish crossover, and it's pointing down. It's at 36.33. It's below the 50 level. The stochastic is cycling down. It's telling you that prices are closing lower and lower within its range. Let's go to the volume analysis with the line bar. You see it turning down. Okay, you see the volume is slowly trickling down. You see it. It's moving sideways, but it's pointing down right now. As prices right here, the green line of closing prices has broke back below its previous high. The volume is also broke back below its previous high. The accumulation distribution line here is holding flat, but the price volume trend is pointing straight down. The volume seems to be coming out. You don't want to try to be long something like that. Let's take a look at the guppy. You see the guppy. The magenta line of closing prices is back below the faster, shorter term green moving averages. You see it. Okay. The magenta line of closing prices is back below it. All right. That's telling you the momentum in the trend is clearly to the downside. And look at the green faster moving average time it's flipped and turned down. So look, the Qs, the DIA, the SPY, the Qs, they all looking the same. Let's go to the IWM real quick. All right, let's keep it on the guppy. This is the IWM, the ETF that tracks 2,000 small stocks, right? ETF that tracks the Russell 2000. Look at the magenta line of closing prices has got back below all the faster, shorter term green moving averages. The trend is down, man. It's clear. It's nothing to talk about, all right? The magenta line of closing prices is telling you It's below all the shorter term key moving averages. All right. Now look at the stochastic for the IWM. Got a bearish crossover. It's below 50. Recycling down. Look at the KST. It's all pointing down. Okay. The momentum is clearly to the downside. All right. Don't even try it. This is not financial advice. But if you try it, I know you're going to wish it was. Okay? I guarantee you that. All right? Because this is not the best. If you get away with it this time, you better be careful. You might not get away with it all the time. And so, look, here's the 50-day, need a 50-yard line for the RSI right here. You see we got rejection, and we coming down there this 40, this red line. It's right now the RSI is at 41.40. Look at the check and money flow is in the negative. Money is coming out of the IWM. It's the same picture, okay? It's the same picture. This is clearly momentum to the downside, all right? And now let's look at the key moving averages real quick. You see you're closing below a 5 and a 9-day moving average? It's nothing to talk about. It's nothing to talk about. You're closing below a downward trending 5 and 9-day moving average, okay? It's nothing to talk about. Look at that. You're closing below a downward trending, downward sloping 5 and 9-day moving average. You're back below it for 2 days. Well, you closed below it here, and now you're back below it for 3 days in a row. Look at the volume, higher than the previous day. Distribution today, higher volume, a down day with higher volume than the previous day. Distribution, you see it. It's the same picture. This thing, the DIA, the SPY, the QQQs, and now the IWM. Let's take a look at the ITOT. The ITOT, the Standard & Poor's Total Market ETF. We short this one too. Well, you know we love this ITOT because it don't move much. It can't really hurt you that much, right? It only moves $2-3 a day. So it ain't like you get hurt but so bad. But look at it. It's down below the 5 and the 9-day moving average for 3 days in a row. Today, higher volume than the previous day. Distribution. Yo, what more? What more you need to see? It's nothing to talk about. You're trading below and closing below a downward trending 5 and a 9-day moving average. Like I said, you don't have to be short like me, okay? But at least you won't get yourself hurt because this is not something that you want to be long. We are not going to be long a stock that's trading below a downward trending 5 and downward sloping 5 and 9-day moving average. Now look today, we gap down below this support level at 84.59. We talked about it yesterday. We closed right at it yesterday. Today we gap below it, traded up to it, and look where it stopped at, almost to the penny of the same support level, 84.59, now acting as resistance. Traded up to it almost to the penny and got rejected. The only thing I would say about today's action is that we closed a little bit in the upper end of the range for most of the major market index ETFs. I would like to see that close within the lower end of the range. But at the end of the day, it got rejected at the 5 and the 9. It got rejected at key overhead. Well, it was support, but now acting as resistance, and it traded off, okay? And it's still trading down in the aftermarket, okay? It's still down a few pennies. So I'm just saying, look, this is not something you want to be long. That's all I'm saying. You got to be careful. I told y'all 2 days ago. I told y'all on Monday, be careful. Look, we was on our meeting on Monday. I said, be careful. Be careful. Today is Thursday, and I hope everybody was careful. Here's the ITOT. Here's the faster, shorter term green moving averages. Look at the magenta line. The closing prices is below the faster, shorter term green moving averages. This is a daily chart at ITOT with the guppy, baby, with our guppy. You see it, okay? Be careful. This is not. I told y'all on Monday. This is not a time to try to be courageous. You mess around, get your head handed to you, trying to be courageous. Why do that? Now, this is something that's very important, okay? This is something that's very important. This rally is in trouble. Okay, this rally is in trouble. This rally is in trouble. For the simple fact, one simple thing. I told y'all time and time again, if you get a follow through day, if you get distribution within 2 to 3 days after the follow through day, the rally has a 50% chance of failing. Well, here's the follow through day. Here's 2 or 3 days after. We didn't get no distribution, so that's great. But what did we do? Here's the follow through day. We closed below the low and undercut the low of the follow through day. You can see that right there. Okay. When you undercut the low of the follow through day, now you got a 70-80% chance of failing. Here's the low of the follow through day. I just picked that yellow horizontal support level at the low of the follow through day. You see, we undercut it and closed below it. This follow through day, this rally, now has a 70-80%. Some mathematical analysis said it got a 90% chance of failing. And what is the failure? Where it comes back and undercut the low of the first day rally attempt. So going by the statistics, this thing got a 70-80% chance of failing. Some equations saying 90%. I'm going to stick with 70-80% for right now. That it has a chance of failing. And what's a failed rally? Well, when you undercut the low of the first day rally attempt. So whenever you undercut the low of a follow-through day, it gives you a 70-80% chance of failing that we're going to come back to here. That's down there at 30,000 level. Be careful, okay? It's a 70-80% chance that this rally, this follow-through day for the Dow Jones is going to fail. We undercut the low of the first day of the follow-through day. It has a really, really strong chance of failing. Now, let's look at the Standard & Poor's 500. The ETF, the actual index itself. We're looking at the actual indexes now, right now. We looked at the the Dow Jones. That was the actual index itself just now with the follow-through day. Now, let's look at the Standard & Poor's 500, the actual index itself. Let's put that horizontal support level right at the low of the follow-through day. Now, remember, if you get distribution within 2 to 3 days of the follow-through day, it has a 50% chance of failing, right? Well, look, this day was no distribution, lower volume than the previous day. But look at here, a down day with higher volume than the previous day. Distribution. When did that distribution come in? 2 days after the follow-through day. Right there, you got a 50% chance of failing. And then what happened today? We undercut the low of that follow-through day. That kicks it up to a 70-80% chance of failing. Like I said, some things say 90% chance of failing. What is the chance of failing? What will be a failed rally attempt? Where we come down here and we break back below the low of the first day rally attempt. All the way down here. It's a possibility. It's a 70-80% chance that this thing is going to roll over eventually. It might fluctuate in between here, but eventually break back below this low. It's a 70-80% chance, according to our follow-through day analysis, that this thing could come back. It's going to be a failed rally attempt. You see why you don't want to be long? I'm not saying be short like me, but being long could be dangerous. Okay? Look at the Qs. The NASDAQ. This is NASDAQ, the index itself. Look at it. Same thing. Okay? I'm going to bring it up so you can see it. We got our follow-through day right here. We had the unverified one right here. We talked about that on the blog and in the video. But then the very next day, we had a verified follow-through day right here. What happened 2 days later? Right here on this day, distribution. If you get distribution within 2 to 3 days after the follow-through day, 50% chance of failing automatically. And then now we undercut the low of the follow-through day right here today. Undercut the low of the follow-through day. That kicks it up to a 70 to 80 to 90% chance of failing. That's saying that if this price has got a chance to trade all the way there back down and undercut the low of the first day rally attempt right here. Look, this market is in trouble. This is not positive. This is all negative, okay? We have undercut the low of the follow-through day. This rally attempt that we in right now this follow through day has a 70, 80, some say 90% chance of failing. Okay? So this is not one of those follow through days when you start trying to find these leading stocks and leading industry groups breaking out a sound base pattern. Look, man, this thing got a chance of failing. All right? Here's the follow through day right here for the IWM. Right? It's the same thing for the DIA, the SPY, the Qs. We undercut the low of the first day rally attempt, 70, 80% chance of failing. Here's the follow through day. We undercut the low of the follow through day. I'm sorry. Here's the follow through day here. We undercut the low of the follow through day yesterday and today. That kicks it up to a 70 to 80% chance of failing. We had already had distribution on the IWM, hit the follow through day, day one. Look, 2 days later, down day with higher volume than the previous day. That already had kicked it to a 50% chance of failing. Now, we undercut the low of the follow through day. Now we had a 70, 80% chance of failing. The rally had a chance of failing on every one of the major indexes. It has a 70 to 80% now chance of failing and going back to undercut the low of the first day rally attempt. I hope you are picking up the jewels that we are dropping. Because if you're not, I feel sorry for you. This thing is in trouble. 70, 80% chance of failing. This rally, this market could trade back down to the lows of the first day rally attempt. It's a 70 to 80% chance of failing. I'm telling you, be careful. Be careful. See you in the next video.